All right, hey all. So I wanted to walk you through a little bit what I personally do with the NetPicks ETF investor. There is an awful lot here and a lot of features and certainly quite a bit of benefits, but you can be sometimes a little overwhelmed in the beginning. So I want to sort of take you through a bit of how I use all of the features that are here. So when you log in, you'll go to the ETF dashboard, and I definitely recommend going to the tutorials and how-tos. This is worth reading through, so you start to really understand all of the analysis that is going on in the background across 150 plus exchange traded funds. I would point you to how you are going to actually trade with this, and how, for instance, I personally use it to manage my ETF portfolio, having taken control back from a professional money management firm where I did not get any kind of results that even met the market, which was fine considering the way I was allocating, but I was also paying an awful lot in fees. Both the funds and the management fees were crazy. And if you're familiar with that at all, 1 or 2% over the course of a number of years can add up to tens of thousands, hundreds of thousands, even millions of dollars. Over time. It's almost kind of crazy if you do any research on that, which I'm sure in the weeks ahead I will show you some of that research. It's shocking. So down here, how to use the NetPicks ETF investor, there's kind of like 3 basic ways that you can use this, because again, there's tons of research and all kinds of great information at your fingertips, but I like to systemize things too, right? Because you got to be able to act upon it. So I've really broken it down 3 different ways you can turn this into buy, hold, and sell signals for yourself. I, for instance, tend to gravitate towards this first one, and the first 2 columns, which you'll get to know very well, is our power score and our long-term trend score. And so the ETFs that I personally am trading, as long as those are positive, I am staying in a buy and hold. This is not day trading, right? We have other products for that. This is not speculation. This is really in your long-term buy and hold, retirement account, savings account, your portfolio. We are not looking to get in and out dozens of times per year. I mean, I may literally have 1 trade or 2 trades a year in a given ETF. That is what you're looking to do with this type of trading. And then I explain to you how I sell, and I basically look for an early warning signal, which is when my power score goes negative week 1, and then if it's negative 2 weeks in a row, and it probably will be, the long-term trend is negative, that's when I go ahead and get out. There's a modification to this here, and then there's a strict green zone and non-green zone, which I'll show you here in a moment. That just makes it very visual if you prefer that as well. This also will always make sure that you will stay in the market on ETFs that at least have average or better momentum compared to the overall market. However, this sometimes in a very bearish market, there will be ETFs that are green that may not be very strong at all, because it's just relative to the rest of the market. All right. So what I typically will do, so there's this quintile heat map, which lists all of the ETFs that we follow, and we break them down into 5 separate sections. Section 1, which is a fifth basically of the overall. These are your strongest ETFs right now. Virtually all of them will be solid green. You can see one little exception here. Quintile 2 is going to be mostly green, though you see a few exceptions where the long-term trend is getting weak on a few of these. But zone 1 and zone 2 here, or quintile 1 and 2, I should say, typically those are going to be favorable to stay in the market, except when you see the green start to turn here. You may consider this as an indication that it may be time to be looking for the exits on some of these specific ETFs. You start to get to tier 3, which is kind of right in the middle. This is going to be average or below performance. This is certainly going to be below average, and these are your worst performers. I mean, to be in any of these right now wouldn't make any sense on a long-only basis, because there's quite a bit of outperformance in any of the ETFs up above. All right, so that's how it breaks down that way. Now, what I like to do, and I'm going to show you just really quickly here, you've got a few things that you can do. Now, I've got some sample portfolios for you, because again, when you've got 150 different ETFs, it can be a little overwhelming, I understand. So where do you start? Well, the simplest strategy possible would be this one, stock or bonds portfolio strategy, right? And You basically have the US large cap ETF, in this case Schwab, but it could be the SPY, it could be Vanguard's large cap ETF, for instance, and then bonds. All right, and a lot of people will tell you, if you've done any reading on this, if you had 60-40 or 70-30 or 80-20, depending upon your age and how much time you have to go, you literally can manage your entire long-term portfolio with just this one and probably beat just about everybody by doing it this way. Plus, you have very, very low costs. These are super low-cost funds, and then there's no management fees, right? So you don't have to have a professional do this. Based upon looking at this right now, you can see we would remain in, and we've been in, the US large cap ETF for quite some time, and both of these are positive, both are green. You notice bonds, we've been on the sidelines. This actually turned negative several weeks ago. So if we were 40% bonds, we would have exited at that time, but we'd still be holding 60% of stocks. Or if we were much more aggressive, maybe we're 80-20 or even 90-10, that would still be in the market at this point. Both numbers are green. Plus, if you're using my approach, the power score is positive, right? And like I mentioned, when this turned negative one week and then a second week, and this negative as well, I exited in this case. You can get a little bit more intricate, as you can see, some a little more in-depth portfolios, and especially if you like sectors or like to get involved in that. But let me show you the what I came up with for myself, and it doesn't mean it's the answer for you. I have this little miscellaneous under asset classes. It probably should be in the portfolio section, but I put it here. This number 20 miscellaneous. These are actually the funds that I personally trade for myself. Now I have an allocation. So biotech, I'm only in about 10%, and another time, maybe in this article later on, I'll show you my percentages. Those percentages were good for me. You need to do some research on your own to decide what works for you. You don't need to follow this exactly as I've written. I just have this long-term belief in biotech. I have this long-term belief in technology and health shares. So that's why I had some exposure. The majority of what I had was really in the S&P 500, the mid-cap, and in this case, the NASDAQ right there. Then I have some specialized NASDAQ. This is the Internet ETF, which is PNQI. Those are my personal beliefs, right? And the idea of this is long only. So I'm only holding long. I'm assuming that I'm in my mind thinking that these will be higher 10 years, 20 years from now, okay? So in the meantime, I want to be in them when there is positive momentum. So if you're basing it upon the green zones, you can see up to here, and maybe also the S&P Small Cap Health, we would be remaining in. Now, the S&P 500 has one green, one not. So this is pretty much probably something that maybe you tighten the stop or you watch very closely, and then I would be out of emerging markets and out of bonds, okay? If we're doing the colors. Now, me personally, I use the power score. So I would be in all of these, and I remain in all of these at this point because they're all positive. And this is the second week in a row, by the way, that this is negative. This agrees, so I would be exiting the emerging at this point, and then I've been out for several weeks of the bonds. I'll just be watching these, and the nice thing is my work is done here now for this week because my only action is just to exit at market the emerging ETF because it's been negative for 2 weeks in a row on the power score, which is the first column, and the long-term trend agrees. All the rest I remain in, and my allocation still probably has me 70% or so in the market. I have a decent little allocation to bonds based upon my personal age, but right now I'm out. Now, I will get back into bonds once both of these roll positive. This is only updated once a week, so it's super easy. All right, so this is a short video. I'm going to try to do these on a regular basis and each time introduce some new concepts to you. I don't want to overwhelm you, but I'm hoping this kind of helps a little bit to understand just how much power there is here. And you, of course, can go ahead and start to put together your own portfolio. You don't have to get super intricate. You don't have to have 20 different ETFs. You could do it with as little as 2, like I showed you with the large cap US and the bonds. And you're going to be better off than probably 95% of the people out there. If you want to take it another level further, then you can start to build your own portfolio like me. But I do not change these all the time. One thing you don't want to do with this is don't turn this into your active trading. Stick with your allocation, rebalance maybe once every 6 months, once a year. Maybe look at your allocation once a year. And then just watch once a week. That's all you have to do. And this is great because you can miss a couple weeks if you're on vacation. It's not going to change dramatically. So everything else with NetPicks, right, is all about active trading, day trading, swing trading. You got to be on top of it. The beauty of this type of investing, it's super low cost. It's just trying to be in the markets when there's good momentum. It is not about trying to be speculative or create income. It's trying to grow your portfolio. And the great thing about it is you'll see in weeks ahead, I will show you how good it did when markets turned into bear markets, how we were on the sidelines for weeks and months during a lot of the real painful downturns. So we never had the 40, 50, 60% drawdowns like everybody else had. We have drawdowns without question, and we don't get in at the bottom. Okay, that's another thing you have to understand. But we have a lot less pain when we trade this way. And I should say invest. Trade may not be the best word to use when we invest this way. All right, if you have questions, please ask them, and then I will try to, based upon your questions, decide what some future videos should cover. All right, thanks a lot. Hope you enjoy the service, and we'll talk to you all soon.